Another question that we get is um, the rebalancing of bonds into equities or deploying of excess cash, and where we see opportunities now that equities are down, say 30 to 40% in some cases from their peak. I do think that now is a good time to do rebalancing, and that's really when rebalancing makes the most sense, is when you see these dislocations occurring and you have one asset class strongly underperforming and other asset classes like bonds which have held in there and done relatively well. This is really the definition of rebalancing. When we look at our assets and we see that they're much different from our target allocation, we would want to rebalance. One caveat that we have at Exencial is we want to make sure that we've got enough money set aside in bonds to cover several years worth of expected withdrawals from our clients' portfolios. And so, assuming that those are covered and we have excess investments in our bonds, aside from what we might need from withdrawals for say the next 5 years or more, then we could look at doing some rebalancing. And now, uh, studies would show that in times like these, where you have these large, wide differences in performance, that this is where we pick up what we call a rebalancing bonus, which is um, at in times in which many people are looking to sell stocks, a rebalancing bonus or higher expected returns come in when we are willing to buy some of those stocks, when the market largely wants to sell them. And we'll find that maybe we don't time it perfectly, maybe we don't buy at exactly the low, but that's okay. When we're buying assets at 30 to 40% below where they were trading just 30 days ago, um, history shows us that we'll be rewarded for picking up these assets at relatively attractive prices. So we would want to look at doing rebalancing from bonds and excess cash as well, putting that cash to work. We may not time it perfectly to get the exact low point, but we're buying at very attractive prices. There's no reason why virtually every company in the United States should be worth 30 to 40% less than what it was a month ago, other than that the market is demanding. The market really wants to sell, and if we provide that liquidity over time, we should be rewarded for that and capture that rebalancing bonus.